Trading to tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. A little bit of a red day here coming in. We got everything moving lower. We're going to talk a little bit about what is happening, what is causing the dip, or I should say the dips, because everything is dipping here. You've got stocks lower. Crypto is getting hammered today. Once again, I stopped out of that Bitcoin trade pretty quick here that I took yesterday. Hold on, let me fix my lighting. Sorry. Stopped out of the Bitcoin idea pretty quickly. Price keeps going lower for risk assets here today. And kind of interestingly, it's like you had, by the way, I did decide to close out of the NASDAQ trade. So I'm no longer in a NAS trade. I think we've kind of lost our structure here, at least for now. I'm going to watch and see what happens with price today. I may jump back into a trade. I still do like the NASDAQ on the long side, but I don't like the way that we are not respecting here the follow through. I was looking for price to keep moving higher. In fact, we actually have broken through the 618 and 50% retracement. So I'm going to watch this candle really closely on the daily and 4-hour candles to see what is going on here and whether this market wants to roll over a little bit. We could be in for a bigger retracement. It wouldn't be out of the question, and it would be certainly healthy. I mean, I know that sell-offs are never fun. They never feel good. If you are long crypto, if you're long individual stocks, if you're long indices, if you're trading them, it doesn't feel good when the market starts to dip. But also you have to kind of understand, where are we in this cycle? We've had a phenomenal year, and this is just 2 weeks of pullback. If we take a look at the S&P 500 specifically, you're talking about a dip that is just 3.75%. Remember, 5, 10, even 15% pullbacks are normal and healthy in bull markets. That would put us all the way down as far as 5,800, right? So this whole range is fair game for constructive pullbacks. Now, taking a look at the monthly chart, just from where we are in the cycle, I've mentioned that I'm still a dip buyer on this market, so long as we can continue to hold market structure on the monthly time frame. So I'm not willing to say, oh, this market is dead, it's going to roll over forever. But I think we do have to be careful, because here's the thing, right? A lot of people, especially if you've only started trading in the last 1, 2, 3 years, even if you've only been trading for the last 3 years, it's not your fault, but you've never experienced what is a truly ugly bear market period. If we go back into 2022, we take a look at tech stocks during that time frame. At the index level, if we go back to 2022, this was a key learning lesson for many people who were trading or investing during that time. NASDAQ dropped 37.75%. If we go back and look at Bitcoin during that time, go back to 2022, Bitcoin dropped by 78%, 77%. Why am I showing you that today? Because when it comes to things like Bitcoin, NASDAQ, etc., that have huge upside gains when the market is good, you must understand that there is no such thing as a free lunch in the financial markets. What I mean by that is that if something has huge upside, it also has huge downside. And so as we look at this market sell-off here in something like Bitcoin, you have to understand, down 25% does not mean 25% and then we're going to go right back up necessarily. I mean, we could, if the bull market overall continues in the NASDAQ, S&P, et cetera, you could see further downside, further advancement on Bitcoin. But please understand, there's a lot of people out there who have not experienced bear markets, and if you've never experienced bear markets, it's not your fault. I'm not playing the gatekeeping side by any means. I'm just telling you that if you've not experienced that, please understand that Bitcoin, if we do enter into a prolonged selling period in risk assets, Bitcoin historically drops 60-70%. Where would that put us in Bitcoin price? And again, you're going to hear immediately people say, well, that's impossible this time. They said that the last time, the time before that. Down 70% would put us at 37,000 on Bitcoin. There's a lot of people who would get wiped out by that. A lot of people get wiped out much sooner than that because there's so much leverage in the system. Michael Burry closed his firm because he admits doesn't understand the market right now. That is fake news. Now, he did close his firm, but he didn't say that he admits he doesn't understand the market. So that I know exactly the post you're talking about. He did not close it for that reason or disclaim that was why he was closing his firm. Michael Burry shorting the market. Personal opinion, that's not why the market's selling off. There's several other reasons. For example, a much more pressing issue is that now that the government shutdown is coming to a close, we have a very real uncertainty in the form of all this economic data. People have been worried about it, and now we're going to find out. And so people are saying, oh, that data is going to look horrible. We've had a bunch of people who weren't paid during a period of time, a bunch of uncertainty during that time, a lot of reports of layoffs, etc. I think people are actually selling because they have uncertainty about what that economic data is going to look like. I think that's why the market's more likely selling off. Because if you say, oh, no, it's Michael Burry, no, he's said for years bearish things. This time is, it's like the boy who called wolf, right? And I mean no disrespect, because the dude is brilliant and has been correct in many things and has also outperformed the S&P 500 in the last 5 years. So I am not, disrespecting the guy. I'm just saying he's put out warning signs many times. This one isn't the reason the market's selling off, right? Is it one contributing factor to the AI valuation uncertainties? Sure, that's fair. That's fair to point out and say like, oh, Michael Burry's just uncovering a bigger conversation, which is, AI valuations. Fair. But AI valuations are one piece of it. Guess what else is a big piece of it? Economic data that is now going to start rolling in. Guess what else is a piece of it? The rate cut story is no longer as clear. Okay. So a couple weeks ago, we looked at markets at all-time highs. We said, okay, it's because we have a pretty much 100% chance that we're going to cut rates in December. December 10th is coming up pretty quick. And December 10th, we are now about 50-50 in terms of probabilities that a rate cut is coming to this market. That's more likely to be moving the market than a tweet from Michael Burry. Not to say that's not a piece of the puzzle. I think there's multiple reasons why markets are moving lower. I don't usually think it is ever one sole reason. There's usually a combination of things. But the lower probabilities for rate cuts, AI stock valuations, and the fact that you've just had a remarkable run up, maybe a little profit taking is happening. I think we don't need to lose our shirts off the idea that the S&P 500 is down 3.6, 3.7 from the highs, right? These are very normal pullbacks. Now, they're not so normal if you're talking about like really like unprofitable tech, like what's like the quantum ETF, like, I don't know, like stuff like this. Like this stuff has gotten destroyed, the unprofitable tech stuff, the highly speculative stuff. That's different, right? That stuff is truly crashing. But that's not what we're talking about here. That is speculative in nature from its beginnings, right? Same with crypto. These things are highly speculative. They can get destroyed. Even in a bull market, they can go down 30, 40, 50%. But that's not what we're talking about. We're talking about the highest level, generally speaking, the framework of the market, the big time indices. They're moving lower, but they're not. This is a drop in the bucket compared to what a true market pullback would look like, right? 10, 15, even 20% correction in the S&P 500. that's the kind of move we'd say, okay, that's a stock market sell-off. That's a stock market dip, I should say. The 38.2% retracement here on the S&P 500 puts us back at all-time highs over here from the beginning of the year. It's very possible. So do I think that's necessarily where we're going to go in the short term? No, I'm not bearish on the market. I'm still pretty bullish on it. However, you have to understand what is a possibility in case I'm wrong, right? So when I look at S&P, when I look at NAS, I am bullish on these things, but I recognize that if I'm wrong, a healthy correction still could bring us all the way back down to like 6,000. And big picture, that's still healthy within a bull market, right? So you have to ask yourself, what would that mean for you in your portfolio? Are you okay? Could you survive what is a very normal and possible pullback to something like 6,000? If the answer is no, because by the way, that would mean probably Bitcoin down another 20, 30%. It would mean, individual stocks could see much lower downside. You just have to ask yourself, would I be okay in that scenario? Let's also talk about precious metals, because precious metals are pulling back here pretty sharply. Take a look at gold prices this morning. Gold traded up to 42.44. Is this a lower high? Well, going off the definition that we talked about yesterday, my thought process on this would be potentially, but for us to really say this is a lower high in gold, I would need to see a break through these structure lows. So if you saw this kind of move, then that would tell me, okay, we might have actually seen the rollover. We are still following that pattern from 1980, 1979, 1980, which is really interesting. But you're coming into an area where the bulls want to hold it. If the bulls are gonna keep running this thing up into year's end, 4,000 is a pretty big area of support. I would say between 4,000 and 3,900, my opinion, that's where precious metals have to hold it. Because if they lose that, if they lose this area, I think you're probably going to see a bigger push down to those levels that we talked about, in past weeks. The 200, the 100-day moving average become very real magnets if you break through underneath 3,900. That's my opinion on gold. I would say that when it comes to precious metals, I am really on the fence. Let me explain. So if I go to silver, silver is getting a bullish reading. You have seasonality that looks okay. The daily uptrend is still intact, getting a sharp pullback here. I still think it has some upside, but it's only a +5 score. And when we look at gold within Edgefinder, this has been getting a +4 score. So kind of a more neutral view. We also will be getting some commitment of traders data pretty soon. And I'm very, very curious to see what institutions will be reporting in terms of what they've been up to. Have they been buying the dip here on precious metals, or have they been sellers, right? So we'll get that information. I think we're going to get that today. We're going to keep an eye on that, but I believe, unless I am mistaken, it might be next week. We might get our first COT data again next week, but institutional activity will be updated within Edgefinder as soon as we get that data. So stay tuned on that. We'll be watching for it as soon as it can come out. Are you an 8-cap still doing the 8-cap Edgefinder deal? Yes. If you need some information on that, here it is. 8-cap. It's like if you deposit over $10,000 into a new account or something like that, they essentially purchase the Edgefinder for you. So if you are interested in that, it's a1trading.com/8cap. And if you have any questions, feel free to chat with us on our website. Just go to a1trading.com and chat directly. But yes, all the information for that can be found on this page, a1trading.com/8cap. We do have an ongoing partnership with them, and that is available if you are able to make a certain deposit size. All the details are on that page. Yeah, so precious metals are pulling back. Everything is seeing a little bit of red here today. Crypto, like I said, so I closed out of my my long position on Bitcoin. If you've been watching the videos, then you know yesterday we were right at this 50-day moving average. And I decided to take a small stab at going long Bitcoin. That completely flopped here this morning. I was stopped out. And so now I'm just going to reset and see what happens. But I pointed out that historically speaking, this 50-week moving average has been really important for Bitcoin. Take a look. If we just scroll back in time to the prior bull market, you can see that the 50-week, well, that's the 20, but the 50 right here, right, came into play. And that was a line in the sand for bulls a couple different times. And then when we lost it, we really lost it. In fact, it's been a really strong historical indicator for Bitcoin. Going back over here, you can see the 50-week moving average stayed intact. We retested it, found support there, and then we lost it. So in the past, when we've lost the 50-week moving average for Bitcoin, it's not been good. And it looks like we might be losing it today, right? What I mean by losing it is the weekly candle closing decidedly beneath the 50-week moving average. Bitcoin has been a real disappointment in the last few months. You know, the NASDAQ has been pushing to fresh all-time highs, pulling back obviously today, but during this period of time, we've not seen the same kind of participation in cryptocurrency. Oil's also up today, which I thought was kind of interesting. Oil is moving up here today. But yeah, Bitcoin to me, I would still like to see, I would love to see Bitcoin pull off a reversal, meaning, you know, put in a low, break structure, higher low. I'd love to see it. But again, I can't ignore the technicals in front of me. Technicals look rough for Bitcoin. This was, you know, lined up with the 50-week moving average, a critical level of support looking left. This was where I thought we would hold, and we didn't. So I got to stop out, and I got to manage risk. I joined 8cap with the A1 affiliate link to have another separate trading account. Awesome, Blend. Thank you very much for doing that. That does support our work, and I appreciate it quite a bit. After listening to Chris's market analysis, no sharp decline surprises me anymore. Being defensive is very important. Yeah, I mean, I think that you are actually seeing some pretty good selling today. And I think Fridays have been interesting here because Fridays have actually been bottoming days in recent time. Like this was a Friday and this was a Friday. So believe it or not, we had a huge reversal this whole week, right? We launched back up last Friday and then sold off completely. We are back down to those lows of last Friday. That's pretty shocking reversal here. And I'm very curious to see how this candle closes, because if you close with a long wick, then I think we might actually still have the bull surviving this. Today's so critical because if you close decidedly beneath this, to me, that just looks really ugly. And that means, you know, what I would say is the next spot is to eye up that October 10th low, which, by the way, that's another, from where we are, it's another 2.5% lower. So yeah, tech stocks are under some pressure here today. Again, full transparency, my thought was after this candle and after this follow through, I thought we would be headed back towards those all-time highs, but sellers have come back in and are now at least getting us back down to support. But you can see what price is doing here. We're 15 minutes out from the open, and price is settled right there at last week's Friday low. So it is decision time. Are tech stocks going to see some real selling into the close here today, or are we going to bounce? And I think if you start getting into the lower time frames, take a look at that 4-hour chart. I mean, you can see prices halted right there at that supportive level, where last week we did see some very sharp reaction to this area. Last week, I bought the NASDAQ right here, or right around this area, I should say. We did get that a nice initial push, but ultimately seems like we have failed to hold those gains, and we're now back down towards those lows. So here's the thing. If I'm looking at NASDAQ on the daily chart, what do we do from here? Well, I stopped out. So I took my loss. I'm out of the trade for now. If we rebound today nicely, I may rejoin the trade. On the long side, I still like the NAS to the upside. I'm actually cheering for it to show me a little strength here today. Maybe I can rejoin the move and look for, you know, another long setup. If we can't, the next area of support that I've got marked up on my chart is not down until we get to those October 10th lows. So I am either looking for a rebound and a nice wick off the bottom here today to potentially jump back into the trade, which would form up some nice like kind of structure. Let's just say, for example, that we get the candle today ends up looking like this, right? If we get that candle today, I'm a buyer. Like I'd probably buy that with a stop below. As long as Edge Finder still looks okay, we need to check something. Did we get our latest put to call? Interesting. Interesting here. Let me take a look at NAS. 13th. Wow. Wow, guys, this is interesting. Let me explain what I'm thinking here. I'm surprised we didn't get a sharper read in the put to call. I would have expected yesterday's flush to the downside sell-off to attract a lot more puts, but we didn't quite get that. So sentiment actually doesn't look that stretched to me right here. Nick, are you gambling? Yes, every day. Trading is gambling, in my opinion. However, controversial, I know. A lot of people just got really upset. Not in the way you think. A house, in my opinion, when it is engaged in the act of gambling with an edge, is still gambling. It's just gambling with an edge, so you make money over time. We never know with certainty what the next outcome of the next trade is. By that very nature, it's antics, it's specifics, and I don't want to derail the whole stream on this, but it's a technicality. It's like a definition. You could maybe prove me right or wrong, but I don't care. Like basically, we never have a certainty on the next trade, right? So by that very essence, that's kind of a gamble. Now, on the next 1,000 trades, 1,500, 2,000, 5,000 trades, am I gambling in the sense that I have a negative expectancy? No, I don't think so, right? Results over a long stretch of time being positive can still be gambling, right? The house gambles every single day. When you go to a casino and you play roulette, the house is gambling too. It's just they're gambling with an edge, you're not, right? If you play roulette, you are expected to lose if you keep playing. Like it's guaranteed over a large stretch. That's how we should be trading. Hey, Denise, good to see you. What's interesting to me, after the sharp bounce from last week, we failed to make a new high. That gave me pause. Yeah, I'm with you, Denise. That is concerning to me as well. Because again, if you were here a week ago, we were buying the dip on that NASDAQ sell-off. And I felt pretty good about doing that. And we were very correct in the short run. We had that nice bounce. But then, and we even followed through on Monday. Monday was gorgeous, beautiful push. Looked like we were headed back to those highs. Then we fizzled out. We stalled out. The engine stalled on Wednesday. And we are back down to where we were last Friday. What do we make of that? What is that telling you? What story is that telling you? It tells me, okay, let me take a closer look at this, because we did not get the type of follow through that Denise, as you pointed out, and myself, I was thinking we would see more follow through. We just did not get it. Does that mean I'm giving up on NASDAQ, that it's just going to crash from here? No, but I think we do have to be a little bit cautious here. Okay, so put to call ratio also gives me pause as well, to use your words, Denise. It gives me pause because I would have expected yesterday's selling to have given a sharper reading in put to call ratio, meaning I would have expected a lot more people out there buying puts. We didn't see that. So maybe the bears have yet to be kind of suckered into a sell, right? So maybe that's going to happen today. I don't know. If we look at it from that perspective, everything in life is gambling. Marriage, having a kid, that's true. That's true. Life is a gamble. Every time you get into a car, every time you, I don't know, do anything. You're right. You're totally right, Belen. A few people are talking about the September 12th gap. Yeah, I mean, we very well, like a lot of people would panic if this move happened, because this would mean another 10, 15% down move for crypto potentially. this would still be healthy. So I am still a bull on stocks and indices, but I think technicals are telling you you could have a little bit more short-term downside if you close decidedly below this today, right? So I wouldn't assume like, oh, we're just going down for sure here, but this chart's nature has changed a little bit, right? So I'm a little bit cautious on this market. Going to watch candles today to see how things play out. I'm still bullish on risk assets in general. So we got NASDAQ, Chinese stocks, Dow Jones, Russell. Actually, let's go take a look at the Russell. Is the Russell, I would imagine it's getting beat up today because the rate cut story is what's kind of fallen apart. And yes, take a look at this. Your October 10th level on RTY, this is the Russell 2000. Your October 10th level has already been breached. If you close below that, to me, the Russell looks a little ugly. You do have some support here a little bit below where current prices are, but I don't love the Russell as much right now. If we are taking a look at, let's see, what else can we get into here? Dow Jones. Dow Jones is holding up decently. Dow Jones looks relatively strong. In fact, I kind of like this 47,000 area on the Dow. If we go, take a look. This is October 10th. Look at that relative performance. Let me show you. Okay, so if I draw my fibs from low to high, notice how we're testing the 38.2% retracement on this move. Look at NASDAQ. We are below the 61.8% retracement, drawing from the same time horizon. Take a look at Russell. We've lost it completely. We've done more than a 100% retracement, right? Relative strength would say the Dow Jones looks really strong. Why? Because it's less tech sensitive. Tech is what is getting sold. Part of the reason also why Bitcoin is getting sold so hard is because, in my personal opinion, Bitcoin trades like one big tech stock. At least that's where its correlations tend to lie, or suggest that it is very correlated to tech stocks, at least in the current era. Nick, do you often add another position if the graph is near your stop loss? No, I don't. I don't usually. I usually will take my trade, and if I get stopped out, I'll reset and recalibrate. I'm not abandoning the idea on NAS longs. I would just like to see today if we can see a little bit of strength, I may rejoin the trade. I still like NAS longs, but definitely need to be careful with this because, again, if there's also this trend line here that I've been looking at. Little bit sketchy here, because if this is a clean trend line break and you close below this, to me, technicals would signal you are at least headed back down to 24,000. That would be my opinion on it. Look at the VIX. That's why NQ is melting. Yes, that is stating the obvious, my friend. VIX and S&P are pretty consistently inversely correlated. That's like saying people are afraid because the market's going down. That's like a given, right? And also what the VIX is telling you, maybe more important from what the VIX is telling you, the VIX is implying that people think the market's going to keep, selling. People are saying, oh my gosh, market is panicking, right? If that starts to get extreme, I tend to take that as a contrarian indicator. So if the VIX keeps going up, if we spike dramatically from here, to me, that would actually be, historically speaking, a pretty strong bottoming signal. But we may have room, like the VIX may expand a little further here. So we'll see. Nick, do you think this gold sell-off will reach the 3,900 level? Possible. I've shared this already. My thought process on precious metals, I'm kind of neutral on them. I'm not super convinced of taking any trades on them. Here's gold's reading within Edgefinder. So I think we are in a range. I think that if you're a bull, this kind of move looks good. Or if you're very bullish, this region should hold. If you think it's going up, right, you would probably think this area is going to hold. I'm too neutral on it to take any aggressive trades at this moment. Silver actually looks better in my personal view for a possible trade with a tight stop kind of concept. So if I'm looking at this and I'm saying, okay, from the low here to the high, the 618% retracement, if you see a little bit more downside in silver, this trade, depending on, especially with some of this macroeconomic data that we're going to get soon, NFP report in a few weeks, if we get some data that suggests the US economy is cooling, this area starts to look really attractive. But we'll see. I mean, to me, that's where it's just a tricky, you're still waiting on some economic data. And I think part of the reason I mentioned this earlier, part of the reason I think the NASDAQ is selling off today is because, oh shoot, we're going to get some of that economic data that looks rough. I don't know. What do you guys think? Let me ask the audience. Just weigh in for a second for me. Tech stocks, more downside or up? So give me a 1 for up, a 2 for down. Just drop it in the chat. Let's just get a little bit of what you guys think in the audience. Weigh in for me. Give me a 1 for up, 2 for down. What do you think is happening next with the NAS? I'll give you my thought process on it. My thought process on it is if I have an if then. If we see some rebound here and we can recapture like the 618 or come close to it, then I think next week we could have some upside. If we close below Friday's low or even near it, then I think we may be headed down to 24. Now, by default, I'm still bullish on NAS. So if I had to make a decision, if I had to buy or sell right now, personally, I would buy. But the beauty of trading is I don't have to. I can wait for the candle to form a little bit. And I can see what it tells me. But I would like to see bulls step in. I don't need to be the bottom buyer, right? I don't need to be the one to buy the low, because oftentimes you think you're buying the low and then it goes much lower, right? So I would just like to see some strength come into this market. We'll see. Crowd's pretty mixed here, but we do have a lot of twos in the audience. People thinking maybe some downside here, a little bit further selling to go. We'll see. I'm not sure, to be completely honest with you guys. I'm not sure if we're going to get some institutional data today, but I'm going to check on this. We have been delayed due to the government shutdown for weeks. This is going away soon. Thank goodness. We are soon going to be able to track institutional plays, and it means more than ever right now, because we've got the opportunity here pretty soon, once this data filters in, to see what institutions have been doing. That's going to tell us a little bit of this money flow that we've been missing. Have institutions been selling precious metals? Have they been buying? There's a bug in here. Have they been buying the stock market? Have they been selling the stock market? That data will be updated pretty soon. Government shutdown has come to an end. That data usually comes out on Fridays, and we will see if we get some today. I need to look into that. I'm not sure if they've delayed that data or not, but I will check in on that shortly after stream. If you don't have a copy of the Edge Finder, don't miss your chance to get it. With the tools that we offer, you can track things like the put to call ratio to see what crowd sentiment is looking like. You can track the Bitcoin to gold ratio. You can look at investor sentiment, which I thought was fascinating this week. We had a huge tick up in bearishness. The Edge Finder's on super sale. If you need 45% off discounts, don't miss your chance. Maybe we can also change the QR code on the screen. If you are interested in getting access to Edge Finder, we're doing our Black Friday discount early this year. It is the biggest discount that we do all year long. You can get 45% off the Edge Finder. It's a one-time payment, and it is a browser-based product. So this tool, it's all browser-based, so you can take it on the go with you. You can have it on your phone, multiple devices. It's a one-time payment. You get access to our top setup screener, which is what I use every day to find the trades that I take, the market scanner, which helps me to build a bias and understand why Edge Finder is bullish or bearish on a particular asset. But regardless of the tools, if you're a regular viewer of the channel, pick it up at 45% off. Here's how. Click the link in the chat right now, or scan the QR code below my camera here in just a second when we get that switched, and you can take advantage of the 45% off discounts by sending in a message to our support staff. Don't miss your chance. It is the lowest price that we do all year long. And in just a second, we're going to throw over the stream to Marco. So Marco is taking over stream right after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well on this Red Friday. So hey Sluggy, what's up? Stocks have been just falling and printing red candles. My Bitcoin position ended up in a loss. Silver, thank God I took profits here on the top, on the double top, because it's going back to break even. I still have 50% of my position open. I will update you on the situation, but I'm holding it for now. USD CAD is red on the day, so this is another open position that I have. And unfortunately, it is red on the day. So looks like the stock market is continuing the push lower. Also, my sort of experimental Aussie NZD position just took me out and now is actually crashing lower. So I would say one of the worst weeks in 25 for me. Maybe not because I took profits on silver. So maybe that was the savior, because I took profits 50% off at this double top. So maybe not the worst week in 25, but definitely one of the worst weeks. Essentially, if you haven't noticed, the US government shutdown is over. They are reopening. So I believe we got a case of buy the rumor, sell the news on silver, on gold as well, right? We got some buy the rumor, sell the news. The rumor started on Monday, buy it, and then the news hit sort of on Thursday, and then you sell. Very, very common trading edge, happens all the time. That is just how the markets work. Should I have closed my whole position here on the top? Possibly. So possibly, we shall see. So why is the Nasdaq actually going lower? So why is it so bearish from the top? Let's see. We are now pulling back 6.58%. The VIX is probably going to be quite high. Yes, that is correct. So the VIX is going higher, maybe even to the 17th of October levels, but not yet in the concerning levels. I think the concerning level would be above 30. I think when the VIX is above 30, that is when you get some massive sell-offs. I personally believe this crash, it's a pullback for now. I think this is happening because the markets are tired of the AI story. The markets are tired of the AI narrative. So let's check all of the biggest AI players. Let's go to Meta. Just falling, especially after announcing on the 30th of October, or I think they did it on the 29th of October, they announced massive spending into CapEx, into artificial intelligence. Markets didn't like it at all. Then you look at Palantir, very bearish, so definitely selling off from this top. Oracle did a round trip, so they announced massive investments into AI. They basically gave OpenAI a blank check somewhere around the 9th of September, and then the markets gapped up. Now they did a round trip back to the beginning, even lower. So it is clear investors, the markets, the traders, the hedge funds, the banks, they no longer love the AI narrative. If you guys want to put in the comment section, give me a couple more companies that we can check that are highly connected with AI so that we can see how they are reacting to this sort of market environment. And for sure, they're going to be down because I think pretty much every technology stock is down. Sort of the combination, the topping pattern, the high ended up being sort of the conference call that Meta had, where they announced massive spending in AI back, I think, 2 or 3 weeks ago. But also you had an interesting interview with Sam Altman. So he is running OpenAI. He is kind of the biggest player in AI, the biggest spokesperson for AI. And he was asked all of this massive spending, what is the ROI? How will the revenue cover the expenses? Essentially, aren't you spending a bit too much? His answer was, if you're not a believer, you can go pound sand. So that's a really bad answer. He didn't have a concrete answer. So that also is a signal that he doesn't really know how he's gonna pay off all of this debt. And he doesn't really know if this massive spending is going to pay off. So the markets are trying to decide, is Sam Altman Elon Musk, or is he Sam Bankman-Fried? I personally believe he's somewhere in between. He promises a lot, but actually delivers, but doesn't deliver as much as, let's say, Elon Musk. Okay? And I don't think AI is going to be this revolutionary tool, revolutionary software that's going to improve all of our lives. I think it's just going to be one more thing you can have in your toolbox as a worker, as a trader, as an investor, or whatever you're doing as a doctor, to do some research, or let's say have a secretary through your PC. So it's going to be like what Excel was in the 2000s. Essentially, when Excel first hit the markets, it was this massive revolution, and everyone thought that every single company will start to focus on Excel and that it's going to revolutionize the way people do business. Well, that was kind of true, but it ended up being just another tool in the toolbox. So I think that's going to happen with AI. It's going to be just another tool in the toolbox to do whatever work you need to accomplish. So in my opinion, AI is definitely in a bubble. There's too much spending going on, and we should correct a little bit at least. This may be that correction, or we can go up a bit more. No one really knows. We are still, I would say, respecting the trend line. So I would say we are still respecting this trend line. And even if a bigger pullback happens, it's healthy, right? So it's not something to be concerned about. It's healthy, and it is just the way the markets work, just the way the markets shake out weak hands. So we must pull back, and then we can go up, right? We must have a correction before we continue higher. I'm not talking about this kind of correction because that was absolutely massive, but maybe like 15, 20%. Let's see. Or not 20, but maybe like 10, 15%. So 10, maybe 15. It could happen. We could even hit this level, but I don't think that's going to happen. I would say a good level of support would be 2,400 and then maybe 2,300. Round numbers. Humans love round numbers. Round numbers are very, very strong levels of support because humans love to put orders around round numbers. Okay, that's my opinion on the stock market. So I didn't mention, am I long, am I short, am I neutral? I am right now short-term bearish, I would say. I know I keep flipping from day to day, but you're going to know my opinion if you follow the A1 trading signals. And my last signal was bullish on Bitcoin. So I took a loss on Bitcoin, which I'm going to talk about. But as far as the NASDAQ goes, I was bullish. I was in a risk-on mindset. I thought we were in a risk-on environment. That is why I took a Bitcoin long. But since we have broken a key level of on Bitcoin, since the NASDAQ is going down with quite a lot of bearish momentum, I would say that we are now we should be a bit bearish. So we should have a short term, maybe a bit of a bigger pullback, right? So the game plan is I'm looking for a pullback, possibly an even bigger pullback, and then I will be looking to buy the NASDAQ. Let's see the top setups. What do we have? Bullish reading, that's okay, but the COTs are old data. So we have to wait for the new COTs, the new data from the Commitment of Traders. Since the government has reopened, we should be getting this data next week once again, I believe. Okay, so that is good. Let's wait a bit more. Let's see what will print here. Okay, let me see the comments. Hi Marco, what is your bias on the DXY with regards to the ending of the government shutdown? Is it bullish or bearish? Personally, on the DXY, I'm bullish. I think the short-term bottom is in, maybe even the long-term bottom. I think the selling is pretty much done for 2025. We have sold the dollar quite heavily. It's an expensive position to have if you want to sell the dollar. And I think we made a nice double bottom, and I don't think we're going to go lower than this level. I think the path of least resistance with the current data out of the United States, I think the path is up. And you have the Santa rally. November and December are great months for stocks. You can check the seasonality on the Edge Finder. So that should fuel the demand for the dollar, because to buy US stocks, you need what? You need US dollars. So we can look at the seasonality monthly. That's what I usually focus on, the monthly seasonality. You can look at the S&P, November and December, look great. Then you can look at, let's say, USD CAD. Again, November and December, positive months, even October. That is pretty good. See the curve? Very healthy curve. The dollar usually gains value at the end of the year. The US stock market usually gains value at the end of the year. It may not happen this year because so far the Santa rally hasn't been in play. We have had a bearish reaction, but we are still on the 14th of November. We still have a month and a half to go. Agent Dark, what is up? The market is in extreme fear, panic selling on the NASDAQ, although I'm bullish. It could be a good time to buy the S&P, possibly, yes. If you're looking for a long-term investment, you're now getting a bit of a discount. If we go a bit lower, I'll definitely consider getting in some long-term positions. Best week for me this year, congratulations. Ball out, when is the next taco trade? No one knows, but it's going to be pretty soon because Trump cannot stay out of the news. He cannot stay out of the spotlight, so he will definitely have a crazy tweet pretty soon. DNA Funded doesn't let you copy trade from your personal account on the funded account, so I passed. I got denied payment due to my EA. Yes, so I believe that is a rule with DNA Funded, is they don't allow trade copiers. So they don't allow copying from your personal to your DNA account. So you have to keep that in mind. Sold silver today. Well, silver selling off quite nicely, so congratulations. You're probably running some profit. In my opinion, gold will still go up next week. Trump needs a distraction from the Epstein files. I don't think Trump even cares about the Epstein files. It was a marketing tactic to get him elected. I personally believe that. I thought he was going to release them, but he didn't. So he just doesn't care. All online prop firms suck. Scams. Okay, ball out. Better to trade your own accounts. If you have enough funds in your personal account, I would highly suggest trading your own funds. Absolutely. The problem is 99% of us, we don't have enough funds in our trading accounts to take out decent chunks of money. So we know realistic expectations in trading. 10, 15, 20, maybe 30% per year. That's what the best traders in the world make. If you can make 20 to 30% per year on average on a sample size of 5 to 10 years, you're a rock star trader. The best trader in the world, Jim Simmons, made 66% per year on a sample size of, I believe it is 30 years. So that is the best guy in the world. Don't think you can make 100 to 200% from your bedroom trading fair value gaps. It's not going to happen because trading is a competition. you're competing with other traders in the world. There's a limited pie of profits. For you to make money, someone needs to lose money. So you need to be smarter than the other person on the other side of the trade. I would say the best option is actually to get a job at a bank or at a real prop firm like SMB Capital. That's your absolute number one best option to become a successful trader. Just, it's the reality. But Marco, I'm not sure I want to buy the NASDAQ anymore without the COD data. I personally don't want to buy the NASDAQ here. And I personally would actually wait. If I think about it, I would actually want to wait for the COTS. So for the NASDAQ, I would like to wait for the COTS to update. And then we can reevaluate. Right now it's a score of 5, but it's pretty low. I think if there's a score of 4, it becomes a neutral reading. So I don't have quite a lot of confidence in buying the NASDAQ here. I think there could be a bit more downside. I'm just being neutral. I'm leaving it alone for now. I tried the risk on play. I tried it with Bitcoin. Unfortunately, got taken out. AMD, NVIDIA, Palantir all down. Yes, Skibidi, it looks like a good area for gold revival. GPUSD, okay, we can check that out. Swiss yen, GP Swiss, what's your take? We can look at that. Ethereum, gold, pound Aussie, okay. Trump taco trade. What is your year-to-date? I think the last time I checked, I think it's 3 or 4% for this year. That's only for my trading, so I haven't had the best year. As far as my investments go, I'm doing pretty well because I bought the dip when Trump crashed the markets. So my S&P investment is doing pretty well. I managed to catch this dip. And I have some crypto, which is also running pretty nicely, even though there is a pullback now, since I bought crypto during this consolidation phase. So investments doing great, trading not so great this year because I've had a rough start. I took a couple of losses, which I shouldn't have. But just one of those years. What happened to the CPI data this week? Just all of the data is delayed. So all of the data was delayed because there's a US government shutdown. And I also want to take this time to mention the sponsor of today's video, which is DNA Funded. So we talked about prop firms. We talked about having enough capital. Let's be serious. So I mentioned 20 to 30%. If you can make 20 to 30% per year on average on a sample size of 10 years, you are a rock star trader because most hedge funds cannot beat the S&P, right? Now, if you make 20 to 30% on 5K, it's nothing. But if you make 20 to 30% on 100K, that is good. You're going to feel it, okay? One of the main issues for retail traders is they don't have enough capital. The way we can increase our capital is we can look at prop firms. So we can look at prop firms, but we must be really careful. There is 95% of them are super shady, ran by teenagers, and will be gone in the next 6 months. DNA Funded is one of the reliable prop firms ran by professionals. They're ran by a very serious, well-established broker. Also, with our discount code, which is A1 Live, you get a very competitive price. Now, it's not an extremely cheap price. It's not like a 70% discount because it's not a scam. It's a 25% discount with the code A1 Live. And with that code, you get a very competitive price for a DNA challenge, okay? So if you look at all of the reliable prop firms like FTMO, 5%ers, and then let's say DNA, with the code A1 Live, you get the best price with DNA out of all of the reliable prop firms, in my personal opinion. And again, I'm not talking about scams that have 70, 80% discounts because that just doesn't work at all. So this is my challenge, 50K two-phase evaluation. I've taken some losses. For this challenge, I'm testing ChatGPT trade signals for a YouTube series I'm doing. So this is purely for content, but if it's going to work, I'm going to put in real money behind it. So anyway, we are now running in a bit of a drawdown. Current trade is open on EJ, a sell, and it is in a little bit of profit. So we shall see what ChatGPT will do in the future. But at one point, I almost passed phase 1, so I was pretty close. Anyway, getting back to the charts, if you want to get funded, expand your trading capital, make sure you go with a reliable prop firm, and you get a great price here with the code A1Live. 20 to 30% is not hard. Well, Ballout, if you can send me your MyFX book, we can take a look if it's hard or not. But I think it's pretty hard because, again, most hedge funds cannot make 2% per month is not hard. I think it's pretty hard because, as I mentioned, most hedge funds cannot beat the S&P. So S&P makes 10% per year on average. Most hedge funds, after fees and commissions, they make 8%. I think 8 or 9. What would you say is a good size for a personal account? 50 to 100K. If you want to completely focus on your personal capital. So if you want to try also, I don't think you can live off of trading if you have 50 to 100K, but you can definitely have a nice extra income, like a sizable income if you have 50 to 100K, making 20 to, let's say, 30% per year. That is pretty healthy. Doesn't mean that if you have only 5K that you just have to ignore trading completely, but you have to think about how to solve your problem, which is you have very little capital. 5K is not enough to make consistent large sums from the markets, right? Making 20 to 30% on 5K per year, as I mentioned, you're not going to feel it. You can then try prop firms. You can try getting a job at an investment bank. You can try getting a job at a real prop firm. So you have a lot of options, but it is a problem that you need to think about how to solve. You are right, I'm down 2% for the month, and it was really easy. We all wait for so, and when it's there, we hesitate. What do you think about the VIX longs? I have never traded the VIX, but I think there's a pretty good edge if you sell options on VIX. So not sell options, but if you position yourself short on the VIX when it goes in the 35 to 40% level, 40 level. So a lot of prop firms, like real prop firms, not like FTMO, but I mean like S&B Capital, they have a clear strategy. They even made videos about it. When the VIX is 40 or higher, they use options to position themselves short because they know the VIX only stays above 40 for maybe a couple of days, no longer than a couple of days. So if you, let's say, position yourself with options that expire in 1 month and you short the VIX, it's a very, very high probability trade. The problem with just going short without options is you can very easily get stopped out. But with options, you can say that in 1 month, the level of the VIX is going to be lower than 40 and you make money. If it's lower than 40 in 1 month, you make money. Very, very easy play. Unfortunately, on my broker, Interactive Brokers, I'm not allowed to execute that trade because I'm in the EU. But if you're in the US, it's a viable trading strategy. I would highly recommend checking out the S&B Capital YouTube channel. They have the strategy clearly explained. So just type in S&B Capital, shorting the VIX. Everything is in there. Easy money, almost free money. There's no free money, but it's one of the best trading edges in the game. And it happens maybe once, twice per year. I would not go long on the VIX. I don't personally know of a trading edge going long on the VIX. Quit trading before it's too late. You'll finish ruined and in debt. I'm up more than 2% this week. Okay, congratulations to Ballout. Constantly grow equity curve. It took years to get good at trading. Do you share your spot position as well? Yep, you have basically a website where you can monitor all of my current open positions if you join the A1 Discord, of course. Why is gold falling if the market is in fear? And also, if you want to join, you can do so and get a pretty sizable discount with my code Marco. Okay, if you want to join, if you want to look at my trade signals, Nick, Ivan, Chris Pulver, all of us are in there, and all of us are giving you trade signals, not just trade signals, but also trade explanations. which is, I would say, the best part about it. Not so much the actual trade signal, but the pictures and the comments that go with the trade signal that enable you to learn. Because following signals is not really, I mean, you can make money with it, but it's not the end goal. End goal is for you to know why the signal was made and why we took a specific trade, so that you can replicate it for yourself and create new trade ideas, so that you can actually learn what we do. That is, I would say, the main point of the signals. Because it's not like Mamba FX trade signals where he gives you just 3 levels. You get the levels, but you also get this long of a file with all of the pictures and the information of why we are doing what we're doing. Buying, selling, being neutral. My FX book, okay, let me edit it and send it to you. Would you like 100%? I'm not sending you my financials. Don't be mad. Don't be mad. Tory Trades showed her she's a scam. Tory Trades, okay. Yeah, don't be mad, Ballout. I'm just joking. Okay. So let's continue with the regular program. I wanted to talk about Bitcoin. For Bitcoin, why did I take a trade? I took a position, ended up being a loss. It was a risk on play. So there were a couple of reasons. First, I wanted to have some risk on exposure. And I think Bitcoin is one of the best assets to use to have some risk on exposure. I thought that the US government reopening is pretty bullish for risk on assets because the spending continues. Trump's big beautiful bill is up and coming. Santa rally, all of those factors made me risk on yesterday. And also technical levels. I saw this level of support. I also saw a nice trend line on Bitcoin right there. And I thought if we go lower than 98, my idea is done. So 98 should hold. If 98 does not hold, we have quite a clear area to drop to, let's say, 76. So that was the plan. I thought fundamentals and technicals aligned. Edgefinder was bullish as well. Edgefinder had a nice bullish reading. Basically, the probabilities were in my favor. Fit the plan. I decided to take a stab at it with a small stop loss with controlled risk. So just a small stop loss, small risk. Well, it was 0.5% for this particular position, but it was a small stop loss. And then throughout the night, it got taken out. Nick had the exact same signal, or just very similar. The levels were a little bit different. Again, I wasn't trying to copy him, but I pretty much had the same idea as him. Maybe I was even a bit influenced by him because I usually use his positioning as an extra confluence for my positioning. So if he's overall short on the dollar or long on gold or long on the NASDAQ, I take that as an extra confluence to do something. So I was considering Bitcoin longs, and then I also saw Nick was long, so it was an extra confluence for me to take a position. We both got taken out, but I still think the probabilities were in our favor. So Bitcoin GPOZ was another interesting Forex pair. Okay, so the pound Aussie. Why do I like the pound Aussie? I told you I was short on the Aussie. I switched my opinion. So we had a massive rally on the metals market. So my opinion on the XME is no longer valid, I would say. Yes, we got a massive sell-off, but I would say we are going to bounce from here like this. And if you don't know, the Aussie is highly correlated with the metals market, because Australia exports, so 30% to 40% of Australia's GDP is exporting metals and mining, okay? So if the metals market is going down or up, the Aussie should be going down or up, right? So that sort of view is no longer valid. Now for the Aussie, if we check out the edge finder, if we go to the Aussie economic heat map, it looks great. Looks very, very good. So short-term data is great. Then we look at the GDP for the Aussie. Let's analyze the long-term data here. So positive, looking very healthy. We look at the unemployment rate. Looks pretty healthy as well. And then we check out the inflation, the CPI. Pretty high number in inflation. So the latest number was really unexpected. And this could also mean that the Australian Central Bank may raise interest rates to battle inflation. Raising interest rates is bullish for the currency. So because of the short-term data, because of the long-term data, I'm bullish on the Aussie. For the pound, I'm really bearish on. So the pound is getting some really bad data. The pound is getting some really bearish data, and I want to sell it. Technical analysis, we are moving lower, definitely moving lower. We are steadily below the 20 EMA. So I'm actually considering short setups right there. I think we have quite a lot of room here with no clear support. The first major support level is at 1.96. If I can take a stab at it to go short at this area, I think that would be pretty good. Not this week, maybe next week. And let's say a 2-to-1 reward to risk. If I can do that, I think that's a pretty high probability position. So that is the reason I have it on the watch list. Okay. Let me check out the comments. Hi again, Marco. Dollar cost average on Forex, specifically euro dollar. I'm short on EU and my average at the moment is 1.16, having a target of 1.16. Okay. Do you think it will likely hit it? I don't know. I can check out euro dollar, but if you took a position, you should know exactly why you took it, and you should follow your exact plan, which should have been back tested and forward tested. So I can only give you my opinion, but it shouldn't impact your trading decisions. Always prepare first and just trust your data, trust your trade plan, follow what you have developed, follow the strategy you have developed. So you said that you were short on EU at 1.16231 and you're targeting 1.16. So it's a small scalp. I'm sorry, I don't have any clear view on small scalps. I'm a kind of a longer term trader. I'm a swing trader. I take maybe 2 positions per week. So I think for me personally, this is just noise. If you're wondering what is my overall opinion on euro dollar, I would say it's short. I would say the euro should be weaker relative to the dollar. So the narrative has also flipped. At the beginning of 25, the narrative was that the euro is going to destroy the dollar in 25. That hasn't been the case. The narrative has now flipped as the dollar still being the king. You can also check out the US stock market. Compare the US stock market to the DAX. Okay, the DAX looks like absolute crap, while the US stock market still looks very bullish. That should give you an idea of what is winning as far as currencies go, especially during this Santa rally that may occur. So I think the money is going to flow into the US dollar more than into the euro. Okay. Nick is buying the NASDAQ. Marco, ball out. Wait, I lost my screen. Marco, quick, Nick is buying the NASDAQ, jump on it. I got into ES again, too bad, might have to hold over the weekend. That is pretty dangerous. I missed selling GBP Aussie. So we are approaching the end of my segment, or I think the whole stream. So for this last chart, I will do just silver and USD CAD quickly to wrap things off. For silver, again, I took a position on Monday. 50% was closed at the high. I'm still running 50%. I'm still in the trade, so I still haven't close this position. All of the updates will be in the A1 Discord. But I'm still in. I think this still has fundamentally a high chance of continuing higher. I think my positioning is still looking healthy overall. USD CAD, I still like as a position. I'm still bullish on the dollar, very bearish on the CAD. The CAD is not getting good data overall. Overall, the data is really bad. So I think this is just a pullback. We can also see a trend line right there, and it's being respected. So I think we're just going to continue trucking higher like this, and I'm gonna trail my stop loss and hopefully get out for a profit. So that is the general game plan. My view has not changed much. I tried the risk on position on Bitcoin. I got burned. So now it is time for me to be patient as far as risk on and risk off goes. Thank you guys very much for watching. I will see you next week on Monday, and stay safe. Don't take any trades before the weekend with a small and tight stop loss, because you can get gapped, especially with Trump's crazy tweets. Thank you. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. All month long, our products are 40% off, the biggest discount of the entire year. You can get access to our trading softwares, trading community, and so much more right now on our website, a1trading.com. Make sure to subscribe for future streams, and don't forget, if you're looking to get access to free courses, prop firm discounts, and free trading tools, as well as massive discounts on all our products, head over to a1trading.com. See you next time.